Hey guys, and welcome back to Smart Money Minds. In today's episode, we're going to be talking about two hype stocks that went too far, too fast. If you were an investor from the beginning, then you'd be laughing. However, if you're an investor at the top, then likely you'd be crying. Today, we're going to be talking about a little bit of the technical analysis of a really famous company called Beyond Meat and also a marijuana company called Tilray and what happened to the stock. These were both hype stocks at their time, and they went up hundreds of percentages within a few short months. And so we're going to be talking about how to avoid getting trapped in these IPOs, or either by shorting too early or buying too late. The first company we're going to look at is the company Beyond Meat. It's one of those companies that was a hype stock since the beginning of its IPO and went soaring for a short period of time before the bottom fell out. And so let's look at the chart here. And as I may be using terms that are unfamiliar to our viewers, let me know in the comments below if you have any questions and I'll address them as soon as possible. Looking at this chart here for Beyond Meat, there's already hype. You see these trend lines that I've drawn for the uptrend. It's a steady uptrend, and it's popped more even because on June 6th there was positive earnings and as well as announcements that Beyond Meat was going to partner up with the likes of Burger King and other fast food restaurants. But by June the 10th, you see here is completely above the upper Bollinger Band. It's completely detached. So the next day it leads to clear consolidation right here. And it takes another leg up on June the 18th, and it is once again way out of the upper Bollinger Band, which are these yellow bands here. And there's two big legs up already, but consolidation was healthy. It's holding this middle Bollinger Band here. And this last bit between June the 25th, from here to July the 25th, that's the final hype. That's when you know that the retail investors, the people that don't know too much about investing, come in. Beyond Meat is on the news. Your aunts and uncles are telling you, you should put money into it, invest now, and it'll go to $500. Even though Beyond Meat is continuing to grow its business by adding McDonald's and Tim Hortons to its list of vendors, it can't sustain that dollar growth that's on its charts. This is growing within the last two months here. As you see here, there's another volume spike close to the earnings date on July the 29th. This doji here means that there is some indecision, and once again, it is out of the upper Bollinger Band. And that's when the top was in. This is when big investor bank money decided to pull out and sell. And in 2 days, it gave back 23%. And anybody who bought the stock between $190 to $239 is now trapped. So what fueled it further is the fact that Beyond Meat decided to have a secondary offering that puts more shares out there in the market on July the 31st. So this dilution of shares triggered as the news catalyst for people to sell. So as you see here for the next month, between July and August, there was a slow decline until it hit a breaking point on October the 1st, and that's where it sold off to now $75. Now, considering that the IPO for Beyond Meat was $25, $75 isn't bad at all. It's triple the original starting price. However, think about those poor souls that have their money that's trapped beyond the price of $75. And this is the difference between speculation of a company versus the actual worth of a company. When the hype can't sustain itself, people lose their money or they get into negative dollar positions and they stay there for a long time. In this other instance, we're going to look at Tilray, with TLRY, which is another hype stock that went from $17 to $300 in 1 month, then gave most of it back. It's now trading around the $17 to $18 range, and this marijuana company was driven by the hype of the Canadian marijuana legalization in October of 2018. Once again, it went up here a couple of times above the upper Bollinger Band, 3 times here, and it consolidated, but it took multiple legs up with increasing bull volume when it finally hit $300, which is way above the upper Bollinger Band, leading to also a volume climax here, and also a massive daily doji candle, and that was the start of the downtrend. It tried twice in October, here and here, to push back up, but there was just no more interest, and it immediately dropped after October the 17th here, because that was the day of legalization in Canada, and this was similar to most of the marijuana stocks at the time. And over the course of the next 14 months, it slowly dropped back down from $140, and it slowly went back down to all the way to around $17 and $18 here. Here's a few takeaways that I see in common between these two overvalued hype stocks and the cycle that they both ran. The hype lasts for approximately 1 to 2 months. For Tilray, it was 1 month, and for Beyond Meat, it was 2 months. And Beyond Meat, even after the first month, there was a period of brief consolidation between $201 and $138, which is a huge range. The second point is, when it's outside the daily upper Bollinger Band, it usually leads to at least a little bit of consolidation. And the uptrend for both these stocks is about 5 or 6 legs up. The top is usually out of the upper Bollinger Band, usually because of a huge spike in price or volume, and the day usually ends in a doji candlestick with strong volume, and this top may or may not be triggered by a news event. There's also a couple of tenths of bounce in the following months after the top, but usually it's nowhere near the top price. And it will eventually settle back into a much more realistic price, even if the company continues to do well and expand itself, because the hype doesn't match the realistic financials of the company. So you see here that speculation can make you a lot of money, especially in a hype company. If you could get in and you could have easily tripled your investments in 2 months, like with Beyond Meats. But I guarantee you that there's a lot more people that are bag holding and waiting for Beyond Meats to be back up to $230. And likely, if the company continues to be successful, this could happen in, the next year, or it could take 10 years for that to get back up to that range. And all this time is opportunity loss, because your capital is held up at a loss position and people generally refuse to sell at that significant loss. So in the comments below, let me know what other hype companies that you've seen in the past couple of years that have followed a similar trend, or have you seen another trend that it follows? And let me know, and if you enjoy my videos, make sure you hit that like button, subscribe to my channel, and we'll see you guys next time.